Hi there, welcome to Kneppy Invest. As a professional operational meteorologist, one of the things I do on almost a daily basis when I am working is to assess and verify my products or forecasts. And the reason I do that, for personal reasons, but also I want to improve as a professional meteorologist. I want to get better over the long run. And I do exactly the same thing when it comes to my investments. I always assess my investments and I'm always looking for ways to improve my strategies. And one of the things I always do is look at the buy-in price. Could I have done anything different? And then when I sell the company, look at how the trade went over its lifespan. Could I have done anything different? The buying, the selling, what mistakes have I made, and what I have learned from that one trade. So this is something I do for every single trade. Now, I have not really discussed this in one of my videos, but because I do this on an almost daily basis, maybe not always every single day, but definitely on a weekly basis, I will always go through my companies that I've holding in my portfolio, particularly my short to medium term portfolio, which is based off technical analysis, based off sentiment, based off trends in the share price. My other portfolio, which is using more of a long-term strategy, I might look at how those companies are performing on a monthly or even a 2 to 3 monthly basis. Sometimes I won't even look at the performance of that portfolio for a few weeks. So let's get stuck into it. I'm going to assess some of my recent trades, be looking at the good, the bad, and the ugly, and focusing on, could I have done anything different when I bought into these companies? First company I want to touch upon is Metro Mining. Now this is a turnaround play. I haven't really been following this company all that long or that much until we got towards the middle or end of 2021, when it seemed the share price, which had been in a long-term downtrend, was coming to a completion. And the first signs of a completion in this long-term downtrend was a spike in volume in September last year. And that was a sign that the bottom had been reached, and the bottom price was 1.4 cents. Now, Metro Mining is a bauxite miner out of Camp York, and bauxite has high quantities of aluminium. Aluminium prices have been increasing quite a bit in recent times. I think Russia is one of the largest producers of aluminium. That's one of the reasons why aluminium prices have been increasing. But this is definitely a turnaround story, because they went into production back in, I think it was August, or maybe towards the middle of last year, July to August, sometime then. Originally, this company was spun out of Metallica Mining, maybe about 13, 14 years ago, mining coal, and they were called something else, and that name had coal included in the name. So they just changed the name to Metro Mining and are focused on bauxite. But the turnaround play. So I saw a period of time here, particularly after that volume spike in September last year, the share price was going sideways. And whenever I see a share price going sideways, I will become interested in that company. And what I'm usually looking out for is a breakout in the share price. And we saw a potential breakout in the share price towards the end of January, start of February. The share price moved from about 2.2 cents to 2.8 cents on pretty good volume as well. And it went past the previous high we saw back in September last year. So that was a potential breakout, but I did not buy on that breakout. I waited for the share price to pull back to 2.4 cents, which was a nice little support level at that point in time. And that's when I took a position at the start of February at 2.4 cents. Share price has, or did go up over the next 2 weeks after I bought in. In fact, share price went from 2.4 cents to 3.4 cents. I thought it was an absolute genius. Then the share price pulled back, which is fairly normal to see that pullback in the share price. Fairly low volume as well on that pullback, and the share price has been going sideways, trending up a little bit since then. So share price currently is at 2.7 cents. I'm not overly or highly confident on the success of this particular trade. Now, I don't have to be 100% successful, but what I want to do is, if this trade is successful, I want to hang on to it as long as possible, ride my winners. And one of the reasons I'm not highly confident about this trade is when they did release their full year results in February, they weren't all that good, but management was quite optimistic about the future, and that's why the share price has held on to between about 2.4 cents and 2.8 cents. If the share price moves above 3.4 cents, that would be a bullish sign, which would exceed the previous high we saw a few months or a few weeks ago. So that's what I'll be waiting for right now, 3.4% to be broken and the share price to continue to rise from there. Next company I'm going to look at is Lark Distillery, and this was, well, I'm going to describe this as an unsuccessful trade. I haven't sold out just yet, and this was me just being a little bit too impatient. Me seeing the share price plunging and thinking I can take advantage of these lower prices. And I am finding time and time again, I still make this same mistake. Finding time and time again, this is sort of the worst sort of time to buy into a company. Whenever you see the share price drop by a fair bit, even if you think the market is overreacting. And that's what I thought here. The market was overreacting. So don't think or assume the market is overreacting, because in these sort of situations, the trade is not on your side. More than likely, the share price will fall, not always, but it will fall over the prevailing or the following few months. And that's what Lark Distillery is doing right now. Negative sentiment in the company, and whenever you see negative sentiment, share price tends to drift downward. So I bought in at $3.60 on this one day when the CEO resigned because he was found smoking meth or whatever, ice, and market doesn't like uncertainty. So I bought in on that day at $3.60 near the low of the day, and the share price has been drifting lower. The next day there was a little bit of buying because, of course, there will be some shareholders out there or some investors out there who see that massive drop in share price and they think the company is cheap. But just because the share price drops by a lot doesn't mean the company is cheap. It could mean the company was significantly expensive before the drop in share price. But the main thing here is share price has been drifting lower since I bought in at $3.60 and is currently at $3.34. The two things I've learned here is just because you think the share price and the market is overreacting on news doesn't mean that is an opportunity. And the other thing is the share price is in a downtrend. There is negative sentiment around this company, and that's not a time to take a position in the company either. Now into a fairly similar situation in Metro Mining, that is Mount Gibson Iron. The one difference between the two companies is with Metro Mining, their significant decrease in share price occurred around May, June of 2021, while for Mount Gibson, their dramatic drop in share price happened around July to September of last year, when the share price fell from 95 cents all the way down to a low of about 35 cents. I'm not sure what happened, what caused the share price to go down during that period. We actually saw increasing volume over that period as well. And when we saw a volume spike towards the end of November last year, that was a sign the share price was bottoming out. And it bottomed out at around 35 cents. And ever since that bottom, the share price has been trending upwards. This is another potential turnaround story. I do think there is potential that we will see Mount Gibson Iron become a little bit more successful in their operations. The other thing that's helping Mount Gibson Iron in recent times has been the increasing of iron ore prices. So one of the things that did not help the company last year was a decrease in iron ore prices. So a couple of tailwinds behind this business. I was a little bit too impatient when it came to Mount Gibson Iron. So I saw the opportunity and I almost bought in immediately without waiting for a pullback, because the share price had run up about 5 consecutive days, and the day before I bought in, the share price went from about 48 cents to 53 cents, so up 10% in one day, and then the next day I took a position. So we did see a share price actually pull back below 50 cents for a brief period of time, and that would have been a good time to buy on that pullback, testing a resistance level or a support level at around 48 cents. The current share price at 52 cents. At this point in time, just like Metro Mining, not totally convinced this was the right play, but it does look like the share price of this company wants to go on a run. So even though I am down by 3 cents, bought at 55 cents, current share price at 52, no reason to sell out just yet unless I see that support level at 48 cents broken. That would be the time to bail out. And if we see the share price get above 60 cents, that would be a good sign, and that will be a bullish sign in regards to this company. Quite a few mining companies on the list today, and the whole reason why there's mining companies on the list is because this is probably the best sector to be taking positions in right now, particularly for the short to medium term. It's definitely not the long term. I'm not long-term bullish on mining companies. I never will be. I'm just looking at short to medium term trades. And West African Resources is one of those potential trades. This is a gold producer in Burkina Faso. And why I bought into this company was really simple to explain. There is this uptrend which is shown or depicted by this upward sloping orange line. The share price had pulled back, decreased because of a coup in Burkina Faso. It looks like that coup has played out. The market didn't like it. Uncertainty, the market doesn't like risk. So the share price pulled back to $1.05 on that day when there was that coup. And then it pulled back again, tested $1.05, which was a nice little support level. Also tested the uptrend. And I decided that was a really low risk play, buying it around $1.06, right on the support level, right on the long-term trend of the company. And if the share price fell to like $1, that would be an automatic sell and wouldn't lose much. But I thought the upside was there. So the upside potential was better than the low side or downside risk. So I decided to take a position at $1.06. And the fortunate thing about that trade or this trade is we have seen gold prices go on a bit of a run since then. Looks like gold has moved into a well-developed uptrend, and the share price of West African Resources has followed that trend, has increased from $1.06 to $1.30. One thing holding me back from being quite confident about the movement of West African Resources share price in the future is that there is a little bit of resistance between about $1.25 and $1.45, because if you go look at the period between October and January, so October last year to January this year, the share price of this company was trading between $1.25 and $1.45. So there would be a lot of shareholders who bought in that range, who saw the share price drop to about $1.05, who now think this company is a dog stock and just want to sell out when the share price gets back up to their buying price. So there will be a little bit of resistance for West African Resources between $1.25 and $1.45. Right now, it's almost in the middle of that range. So hopefully some of those shareholders who want to sell out have had the opportunity to sell, and hopefully they will have the opportunity to sell over the next few weeks as the share price keeps on climbing from here. Now to a couple of trades I made based off half-year results. And this is probably the most successful trade I can do. I have done in the past. Usually this works a treat, not always, but a fairly high success rate. And in fact, quite a few of the companies that have given me the highest returns using this strategy have been based off good half-year results and high volume. So NRW Holdings is one such company. We did see the share price consolidate from about July last year to February this year. You can just see the share price going sideways, the two moving averages coming together, and that is telling us the share price is not moving up, not moving down. It's just going sideways. And usually when you see the share price go sideways for a period of time, what you want to wait out for is a breakout to the upside if you want to go long, maybe a breakout to the downside if you want to go short. And we had that breakout to the upside with NRW Holdings when they released the half-year results. It was a good half-year result. The market reacted really positively to those results on the increased volume. That's very important as well. And the share price broke out of that trading range, that consolidation period. And I bought in a few days later of the breakout. So I was trying to be a little bit more patient, and I bought in at $2.13. If I was a little bit more patient, I could have bought in 3 days later at around $2. So 13 cents, one way or the other, doesn't or isn't that much of a difference. Current share price of $2.25, and that is at more than a 1-year high. So we are looking at a 1-year high when it comes to this company's share price, and it does look like their share price wants to move up. A little bit bullish about this trade right now, just because this chart looks really good for NRW Holdings. Now into another half-yearly or yearly trade I made based off some good results. That is Smart Group. In fact, quite a few companies in this sector had good half-yearly or yearly results. So Smart Group, SG Fleet, Macmillan Shakespeare, Eclipse all had pretty good results. But I focused on Smart Group, not because I'm smart, but because I just like where the company was heading. If we go back to October last year, you can see the share price rose significantly, stayed at that level around $9.40 for about 3 weeks and then fell back. I believe that was a failed takeover bid. That's why the share price increased significantly on one day and then decreased significantly towards the end of October. And then seems like the market didn't like that failed takeover bid because the share price then fell from about $8.40 all the way down to $6.70. Before the release of their February results, the share price was starting to rise for this company. So the market was maybe anticipating some good results. And then when the Smart Group did release the half yearly or yearly results, I can't remember which one it was, the share price did pop up and I took a position in this company. I think it was on that day or the next day. Now, you might see or notice the share price did take a little bit of a hit about 1 week ago from when I'm doing this video. And the reason behind the share price falling a fair bit in one day was because they went ex-dividend. So you have to include the dividend of 49 cents when you look at the success of this particular trade. So even though share price has decreased from $8.35 to $7.79, I have to include that 49 cents dividend because that is real. You actually get that money back. Now onto the last company featured in this video, and that is Babcore. And to be honest with you, I'm not sure why I'm still holding on to Babcore because my whole thesis behind buying into this company is now shot. It failed, and as soon as your thesis behind buying into a trade fails, that's when you should sell out. So this is one thing I am learning right now is to be a little bit more active, and when a trade fails, make sure you get out of that position. That's what I should have done with Bapcorp because my whole thesis behind this trade has gone. It's no longer there. Now, if you look at the chart here, the shares of Bapcorp were trading in a range from October 2020 to November 2021. That range was between $6.80 and $8.50. So my whole thesis here was if the share price got to the bottom of this range, take a position, and then you might see the share price or sell out of the share price or the company when the share price gets back up to the top of the range or near the top anyway. And then we saw something happen in November. I think it was the CEO quit, or he was going to quit, resigned, but he was going to resign next year, and then he quit for some reason. I can't remember the whole story behind this. And the share price plunged from $8.30 to the bottom of the range. And I decided to take a position when the share price got to the bottom of the range and then rebounded off the bottom. I thought that was confirmation that that range, the bottom of the range, had held firm as support. And then a few days later, the share price dropped significantly below that bottom of the range, and that's when I should have sold out, or I could have sold out when the share price retreated back to the top of the range. But we saw a nice little run the share price. In fact, the share price went back into that range, but it moved towards the moving average, and moving averages in this case are resistance level. We have seen it happen a few times with Babcore. As soon as the share price gets towards either the 50-day, 100-day moving average, we have seen the share price pull back, and the share price has fallen from $7.25 to a current share price of $6.01 over the past 3 to 4 weeks. So definitely my whole reason for buying into this company is no longer there. So I'm not sure why I still hold Bapcore shares. That's all I have for this, assessing my trades, the good, the bad, and the ugly. So a couple of good trades in there, a couple of trades where I could have been a little bit more patient, and that is one thing I am dealing with as a trader in using this strategy is you can be a little bit more patient, wait for the pullback like I did with Metro Mining. I could have done that with a few other companies and bought in at lower prices. And a couple of other things I've really learned is whenever your thesis has played out or is wrong, take action. Sometimes I delay that action for longer than I should, and we've seen that with Babcore. I probably should have sold out of that company a fair way back, particularly when the share price had pulled back towards those moving averages, and I thought those moving averages would be resistance, and they were. I was just a little bit excited. The share price had gone on a little bit of a run, so I just got to temper my excitement as well. So if you'd like to leave any comments about what I have done, you think ways I could improve, I'd like to hear your opinion, so leave it in the comment section of this video. Hopefully I'll get to read those comments. Might not be able to reply to those comments. Last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day.